Good morning, everybody, and this is your S&P 500 day trade setups for today. So this week has been, how do I put it, very, very, very muted, and we are flirting with this 4200 area. We did tag it after hours yesterday. I think just get onto it there, and that is, the ultimate target that I've been looking for from all the way down in this consolidation area here. So this was a 400-point consolidation. 2,700 points, sorry, 400 points on the index scale itself, 2,700 pips, but basically that was a consolidation, and based on that you had a round number of 4,200 as your target. So that has been tagged, albeit after hours. At the moment, as far as I'm concerned, we're drifting sideways. Right, so I still have a trade in. I did give it to you on the Telegram channel yesterday. We'll have a look at that now. If you haven't subscribed to the Telegram channel, clear link is below and you'll get my trades there. At the moment, if we just start scrolling through what's going on here, we are pretty much trending sideways. So there's two things on the charts here. Sorry, I'm just adjusting my charts as I talk to you. There are two things on the charts here at the moment. So the first thing is this double bottom, okay, and you can see in my eyes that there is a test. It's tested twice actually. There's a test, here's a test. This is the entry I gave you, which was pretty much 4180. So 4180, I gave you 4180. There we go, 4180 right there. Look to the left, look at all that support there. So if you come to the hour, you'll see that's a support, and we're now consolidating. So there's two things on the go here. So the first thing is this consolidation area here. As far as I'm concerned, that's a solid retest. Look at that, red bar on, green pin bar off, and then we're kind of drifting up. We're drifting up because we're waiting for FOMC. But if I'm reading this correctly, the interpretation of FOMC is going to be positive for the markets, and we're going to break this 4200 area. So 4200 is a big level. It was a previous measured move. So typically what happens when you get to a measured move, and when you're at all-time highs particularly, what next? You're looking for structure, and that's what's been built here is structure. There's two lots of structure, and I'm going to draw them with a blue block. So that's the first one, okay, and we've got a break and retest to validate that. So at the moment, providing we don't drop below this area here of 4130, you are now looking for a target of around 4242. Now there is a round number just above that at 4250. So here is the next consolidation area. Okay, now this one is basically, I'm looking for the last move up, which is there, and then I'm looking for that, and it targets exactly at the same level. Okay, so with all of that being said, I want to keep that, and I want to keep that, and I can keep that and delete the rest. Right, so with all of that being said, this range that we're in now, I suspect we're going to continue in this range today. We've had some really good results. So the FANG stocks that came out yesterday, which was pretty much Microsoft and Google, they basically smashed their forecast, so well above their forecast. I mean, Google was forecasting a 1571 earnings per share. That's Google C, and Google A was 1566 a share, and they both came in at 26.29 a share, and revenue was forecast at 51 billion and it came in at 53 billion. So pretty strong, stellar results. Microsoft as well. Revenue was the same, but earnings per share forecast 178 and came in at 195. So that is significant. That really, really is significant. I suspect today's earnings which are coming through, which is going to be Apple and Facebook. That's pretty much it. After that, it's Boeing, which I think Boeing is forecasting a negative earnings per share anyway. That's to be expected. And Qualcomm, which interesting to see that, because there is a shortage of chips around the market. So it'll be very interesting to see whether they've solved that problem. Other than that, there's nothing really large. There's a lot of companies giving earnings today, but nothing really big. So Apple and Facebook have the ability to drive the NASDAQ, or just support the NASDAQ even more. So what I'm seeing is there was no panic on the results yesterday. So there was no volatility, there was no panic, there was nothing. So everybody is focused on the FOMC, and unfortunately that's what we're going to have to wait for today. So today you're probably going to be drifting in this range for the whole day as well. My trade may actually, I'm going to have a look at it shortly. I'll look at it just now, and I'll let you know on the Telegram channel. But I think at least stop to entry at the moment, just to protect capital. But I am anticipating this break to the upside. That's what I'm looking for. So we'll wait and see what transpires. Not entirely convinced we have everything, all the ducks in a row at the moment, but that's what it is. So now we are rambling a lot at the moment, and the reality is there's no real opportunity to trade. Just run through yesterday's trade again. You can see off a major level, look at these pin bars that started forming here. Good signal, in you go. And this is on the 15-minute, and it's been a slow process. So I think maybe stop just above entry, just to protect capital, and then wait and see what transpires today. But it's going to be a really slow day, so that's par for the course with the FOMC at the moment. And they may throw a curveball, and if they throw a curveball, then the market's going to drop, and it's going to get us a better buying opportunity down the bottom. Or they may just keep things as is and not rock the boat, which is what I think I'm leaning towards anyway. Because they're looking for growth. They're looking for growth, and companies have been growing. We all got everything happening with COVID at the moment, but companies have been growing, and they've been growing quickly. Anyway, that's nobody knows why, nobody knows how. When you look at all the technical analysis, where everything's warning you to bank your cash. But people are still buying shares, and the more they're buying shares, companies are performing and overperforming. So, this is a runaway bull market right now, and you're not going to stop it. So don't try and stand in front of a freight train. That's pretty much the message. So you're looking for opportunity to buy, and either off the bottom of this range again, or on the break here. If you didn't get in yesterday, then wait for the FOMC. Wait for that to happen, and then look for entry on the break and retest of 4,200. Anyway, that's it for me. Way too much talking this morning, and we'll catch up with you bright and breezy tomorrow morning. If I see something, it'll be on the Telegram channel. Anyway, cheers for now.